Anybody over the age of 50 will remember or will have paid 17% for their mortgage. Now, the Reserve Bank, trying to quell a housing boom and inflation, then pushed the official cash rate to 17.5%. This was 1990, and it triggered, as then Treasurer Paul Keating described it, the recession we had to have, the last recession Australia experienced. So this week's official interest rate, 0.75%, 16.75% less than 1990, is unimaginable to anybody who once paid so much. Then, as now, the rate decisions are largely about house prices. If housing is stable or rising, people spend. Remember, private consumption is just under 60% of our total national economy. Today, including costs, you can borrow from 2.77% with Homestar, 2.8% with Athena, and 2.93% with Mortgage House. There's just one thing missing with those lenders. None of them is a Big Four bank that still dominate home lending with more than an 80% market share. Now, if the big banks are to change their behaviour and their rates, smaller lenders need to be given a chance. The more market share they win, the more big banks will be forced to compete. They'll be forced to pass on Reserve Bank rate cuts in full. Just one last thing, if you are worried about smaller lenders, whether they're safe, keep one thing in mind. When you borrow money, you're the risk, not the lender. They're taking a chance on you.